Today's guest helps you to buy a house faster than you can pick up a Netflix show. At just 24, he decided the real estate market was too slow. So he built a company to fix it. Before shaking up real estate, he was at BCG solving corporate puzzles until he created his own. Now, with over 800 million raised and a presence across Europe, he's making home building as easy as swiping right. Please welcome the man who made real estate sexy, Giorgio Tinacci. Giorgio, thank you so much for being with us today. We are very excited to have you and very impatient to hear the entire story.
Thanks a lot for having me. It's a pleasure.
Thank you, Giorgio. We are very, very happy to have you today. Casavo was born in 2017, so take us back to the very beginning. What was the first big move you made after having the idea, and how did you validate the pain point that you identified?
Yeah, I would say I founded the Casavo at the end of 2017. I mean, end of 2017 was more around setting up the company and doing the first trials. I would say 2018 was actually the first year of business activity. And as you anticipated, I had little professional experience, meaning that I have a business background. I worked when I was studying through internship in another startup, food delivery, so completely different sector. And then I joined BCG because I had pretty clear ideas that I wanted to do something as an entrepreneur at some point, but didn't find the right opportunity. So the whole idea started, first of all, because of my passion for real estate. I was born in a family-owned business, essentially. So I was used to help my mother and my father back in the days. And I was really intrigued by this idea of creating something which was at the intersection between a very traditional sector, and real estate, it's quite an example, and technology. Not having a technology background, I was not kind of that into building, I don't know, a deep tech or a pure software kind of business. So the whole idea started with me observing, let's say, a marketing efficiency. So if you look at the residential real estate sector, it's probably the largest consumer asset class in the world, for sure in Italy, where 70% of the net worth of family is invested into it. And, uh, and I was shocked by the fact that little to none innovation has happened into the sector, while digitalization kind of brought the user experience of other industries to the next level. So the only innovation when I started that was really there was the one of classified platforms, let's say Immobiliare.it in Italy, Idealista in Spain, Siloger in France, and so forth, that brought online, I mean, they started roughly 20, 25 years ago, the advertising of the home online. But the rest of the whole transactional experience really stayed the same. They only, let's say, kind of digitized the initial phase of the search process from the buyer. So that's how we started. We started with the grand vision of building a next generation marketplace that would help people sell and buy in a much easier and more efficient way their homes, starting from Italy and then potentially in other European markets as well. So the first days were really around that 0 to 1 kind of phase. I launched the business with a service which was quite innovative back in the days, asset intensive, meaning that we said, okay, how do we bring liquidity to the market? And we can do that by essentially buying directly the home, making a cash offer as a platform, and then as a market maker, taking the risk of finding the final buyer on the market eventually after some renovation. So the problem and how we try to initiate the marketplace kind of flywheel was really around the supply side, the seller part, given how residential markets work in Italy and broadly in the European Union. And so for us, the first kind of trials and the first days were really about trying to buy the first apartment with this new concept and being credible to the market, because in the end, it was myself, the first interns in the company that were visiting tons of apartments every day. And the main challenge was that nobody was kind of giving us trust and believing in what we were doing. So the offer was so good that it was not even kind of credible to the eyes either of the seller or the broker, if there was a broker in the middle of the transaction. So that was
Yeah.
our kind of product market fit initial days. Yeah.
And you started with the like as a business model of an instant buyer, right? And that kind of model requires a lot of trust and a lot of capital early on. So your initial funding round also included a lot of international investors. I was wondering, how did you convince your first investor or even your first homeowner to bet on Casavo at the beginning?
Yeah, I would say that we were quite penniless in the first day, so we didn't have international investors nor connections into that world. And I have to say that, broadly speaking, the pre-seed market was non-existing, especially in Italy. Nowadays, it's much different. If you have a good idea, a good team, I mean, it's quite. I wouldn't say it's easy, but it's very possible and accessible to get, I don't know, the first 500K to start your own business. That in those years, the pre-seed market was not a thing in Italy. I didn't have meaningful connection, but I was lucky enough that through a common connection, I met a first private investor that gave me the first 250K check to start. Was an investor that was developing a thesis in the kind of what was called prop tech back in the days, did a few investments in the same sector in other markets. The first kind of US disruptive experiences, such as Opendoor and other businesses, were starting or had been started in a few years back. So that's how I started. So with the first check, and we got an agreement on a private basis to buy the first homes, use the home as a collateral from this private investor. And then we said, okay, let's give it a try. Let's see if it works. Let's do a few trials. And then the thing kind of started scaling. And when we got the very first traction, we raised a seed round with 360 Capital, which is one of the main VC funds here in Italy, early 2018. It was April. That let's say trusted our model. It was almost pre-revenue anyway, and it was the first 1.4 million seed round. So that's on the equity side, how we started. Then, of course, as you correctly said, the initial model required quite a lot of capital to buy a lot of homes, essentially. And so clearly you leverage that. So it's kind of a fintech concept in that regard, like you would do in Buy Now, Pay Later, for example. So you leverage asset-backed debt essentially to serve and to provide your service as a consumer platform. Nobody was giving us debt in the first days. Clearly, it was collateralized with homes. So the trick was to do, I would say, very artisanal club deals with private investors that were maybe interested in investing in equity in the company. That the request was, look, you can invest in Casavo as a company, but we really need traction in buying homes. We cannot get debt nowadays. Why don't you lend me a bit of money to buy these first homes? And then we build our traction. That was kind of the starting point. And then that allowed us to access private debt funds, more costly than banks or institutional capital, but flexible enough to scale. And then things got more institutionalized down the years.
You ended up having obtaining 300 million in that financing in a very well-known institution, Italian institution like Intesa San Paolo.
Yeah, we raised over the years. I would divide the two kind of buckets. We raised in VC equity, growth equity, depending on the phase, roughly 190 million in equity. So from pre-seed, seed A, B, C, D, and something more, which is not disclosed nowadays. And then in debt, asset-backed debt, I think overall, yeah, roughly 800 million. Clearly, these are all revolving facilities.
Okay.
The main kind of step up was in early 2021 when we got approached by Goldman Sachs as a main lender. So we securitized the whole portfolio. Then other lenders came in on that regard. Up to, I think at the peak, we had 500 million, close to 500 million on the book of homes, which we actually owned through that.
And Giorgio, you went through a very particular period in time, which was the COVID period, when things got a little bit messy in terms of interest rates. And what do you think, who helped you the most between the operator VCs who actually lived it and like had the experience of the founders, right? Or the classic, like the financial ones with their models, for example, who actually helped you to go through difficult periods?
I would say that, I mean, COVID was definitely a moment of uncertainty, and I would say, challenges for any business, but it was not that bad in the end for our
Okay.
business. I would say in retrospective, still, especially in the initial phase when you don't know what is happening, etc. You could not visit homes physically. That was tough. I would say we've been lucky enough, to answer your question, to have a good syndicate of different investors. So over time, we were lucky to be supported by both kind of early stage VCs and then later stage VCs, kind of more uh, institutional funds or investors, but a lot of also private investors, families that have usually are usually involved in real estate business in different ways, or in the mortgage business, for example. So that combination of both people that could provide operational value as well as financial investors that were really benchmarking what was happening in their portfolio and best practices during the time, I think was what was great to have in terms of feedback and support in that particular phase. And I think that's valid for other different moments we had. For sure, for us, when the interest rate environment changed dramatically in 2000, end of 2022, that was valid even more during that period of time.
And regarding investors, how did you find the right, let's say, the right fit with your company, with the company culture? How did you
Yeah.
select it? And did, I don't know if you did the due diligence beforehand, or how did it go?
Yeah, I think that it's a matter of chemistry. It's a people relationship, because even independently from the institution, then it's a matter of who you board as a partner that maybe joins your board and takes decision together with you. I mean, I think it always been a process. It's very difficult that, I mean, you decide to open a round or a fundraising, you meet someone from the very first time, and that person invests. It's very rare. Usually, what you
Mhm.
do is you build a relationship over time with a certain investors. Usually, the best relationships are born where you're not fundraising, actually, and then there is an opportunity at some point of raising, and that comes in. I managed to, I didn't have really a network. I didn't know what was VC or what fundraising meant when I started the business. Also because Italy as an ecosystem, it's a pretty nascent one, and it was even more nascent back in the days. So it was always a matter of meeting people that you feel are interested and are really passionate about what you're building, get into the details together with you. And I always tried, let's say, to get references from other founders, not only for portfolio companies that went well, but especially from those that didn't end up that well, because I think you see the value of very supportive partners, not only when things go very well, but especially when there are problems to solve together. So I always try to kind of prioritize investors that I felt, that I perceived were kind of net stabilizers, so that we're not kind of getting too much excited in hype times, but then we're not getting too depressed when there were things that were not going the right way. And we're happy you could have a very direct and transparent kind of discussion around problems and how to solve your problems. So that's a bit my experience. And finally, I mean, as a side note, what I was saying before, I always try to have the right syndicate of people. So a good mix of, let's say, financial investors, say investment firms, being those early stage VC firms, hedge funds, or equity growth firms. Strategic investors, they can provide a lot of value. For example, we've been working and having the lack of having them as investors, for example, on credit in Italy, which is a strategic investor for us. We have a strategic partnership with the real estate business unit in Italy, as well as private and smaller investors. Maybe you have investors that are invested privately, let's say families. It's full in Italy of those kind of investors that have an industrial background, are operators, and can give you a lot of guidance on how to run your business, especially if they have quite some experience in the industry you are operating in.
Yeah, no, it is a super interesting point that you mentioned, that you don't actually find the best investors when you have to fundraise. You actually have to nurture the relationship and you get to know them over time. So you have more like a proper understanding of of their goal and how they align with you. I think it's a very nice, and also the references. I think it's a great advise to have references from other founders that also failed. I think that that's a very great point. And what should VCs stop doing with founders like you, founders that they're trying to disrupt a very traditional industry, for example? What, from your experience, what would you say that something that actually made you roll your eyes that you couldn't stand from specific VCs without naming names?
Yeah, I think I mean, I try to generalize, but I would say one thing because
Even if you have a specific experience,
yeah,
even if you have a specific example.
I would say first, I had the pleasure, or not the pleasure, to go through cycles, no? Because I built my business starting from 2017. So I was at the start of a very big hype in the VC and startup ecosystem. I believe that kind of zero interest rate period bull race. And then I saw the kind of the halt of the market and then the recovery and all of that. So I've seen things through cycles. And on the back of that, I think, especially as a first time founder, it's very easy to take business decisions or say product decisions, which are just aimed at doing things for the narrative. So what I mean is you take business decisions or you accelerate things just to position yourself in the best way for your next round. And that is wrong because sometimes you do things which are not that accretive for the business, yeah, it can help you raise, maybe you can better position yourself to raise the next round, but are not necessarily the things which are good for your business in the mid to long. And sometimes we see, I mean, it's part of the game. You have this kind of misalignment of incentive that you want to kind of mark up your NAV every round. And so if you see a company raising a better round in at a frequent pace, you can mark up your book, you can raise your next fund better, etc. So I think that's the first thing. The second thing, and I've experienced that especially in the kind of that in that zero interest rate period kind of bull race. The second thing is probably understanding that startups, especially when they are into kind of a phase where they are trying to find a product market fit or they are in a transformational phase, there is a big component of intuition that you have to rely upon on the founder. And so sometimes it's just a matter of having an act of faith on the intuition of the founder on those kind of decisions because he's or she or the team is the one that is really living the day to day and kind of breathing that market sentiment and having some intuitions. Those might be wrong decisions, fair enough, but those are those decisions that sometimes can really make you go through an inflection point to take a much better trajectory as a business. So I would say that's the second part that I would maybe it's not a stop to, but it's rather keep on believing and relying on the intuition of the founding team.
Regarding that, I wonder if you had the chance to get more trust from Italian investor versus American ones, because I think that American investors can be more open-minded in that sense. They can actually trust the founder intuition way more, while European VCs are like, okay, but what's your ROI and what's your, like they want to have what's the cash flow look like. They want to have more data on their hands before making a decision investment.
I would say, I mean, we have Italian VCs, Spanish VCs, German VCs, Israeli VCs, US kind of investors as well. So I had the pleasure to see different kind of frameworks and experience different
Strategies.
kind of mindsets in that regard. I don't think that there is right or wrong. It's for sure in the US kind of VC ecosystem, there is more appetite for risk because that ecosystem has been there for a while to be that kind of power of low play, while maybe other ecosystems like the Italian one are more kind of nascent. So it's normal. And at the same time, I don't think that is wrong, the approach from the European or Italian disease, which I like, and I like to complement it with that, where you are very grounded on the fundamentals of business, because in the end, you don't want actually to be in a situation where you can hit the wall because it's part of the game. And so you need to be kind of as an entrepreneur, ambitious, risk lover, but not reckless on that regard. And so that kind of mindset, I think, is good and it's wise. And that nuance, no? So not being reckless at the same time, taking risks, but in a very aware way, because the reality is that
Calculated way.
yeah, we are also operating in a very different ecosystem. If you fail in the US, it's a thing. If you fail in the European market or kind of in Italy, for example, the consequences are different as well. Now, as a first-time founder, you don't want to know all those implications when you start, because otherwise you might not start. But you need to have awareness and take decisions with a certain degree of responsibility on that regard. So you have to balance out those things. I think that ambition, it's an important dimension that founders and entrepreneurs in Italy need to have to build great businesses that can disrupt or lead an entire industry. At the same time, there is also a component of responsibility and not being reckless on that regard, and not kind of enter into a vicious cycle of power play and be the part of the game. But risks needs to be calculated, and there needs to be awareness on that regard.
Yes, no, that's a great point. Was there ever a moment when it felt like everything might fall apart? Any specific crisis, maybe around, I don't know, liquidity, pricing, a deal, or an expansion? Casavo is now right now operating in 4 different markets. So one moment when you actually feared that was the end of the business, or that you actually
Yeah.
actually hit the huge wall.
Yeah, for sure. I think I like this kind of paradigm to say that entrepreneurship in this sense, especially where you are trying to build an innovative business, it's going from a near death moment to another near death moment and then going forward. No? So it's full of near death moments, even in the most successful cases. And I'm sure that other entrepreneurs shared similar experiences in this podcast. And so it was full. I would say that if I have to rank, the most difficult phase for us was definitely when the interest rate environment changed so abruptly at the end of 2022, because that changed the whole kind of dynamics of the startup and the scale up ecosystem. We were at the peak of kind of VC investments into startup when interest rates were negative, and then when interest rate changed dramatically, then it was not anymore about growth at all costs. It was about getting profitability, having the risk of not getting funded at your next round, etc. And for us, it was even tougher because we were like 50% of our business was still asset intensive. We had 500 million on the book at the end of 2000, almost 400, 500 million, highly leveraged because the cost of equity was much higher than the cost of debt at the time. And so that was a pivotal moment for us because the asset intensive model was working from a value proposition and all of that, but your opportunity cost of, in my case, of buying and selling on the book the homes rather than simply doing brokerage as a platform changed dramatically. And so our reaction to that moment was, okay, we already have an asset-light business we've been working on as a kind of an expansion service over the last 2 years, almost 1 year and a half. Let's kind of over time transition to a fully asset-light model, which implied selling 500 million of assets on the book, repay all the debt. And you can imagine the implication of kind of adjusting your operating structure, your organization. If you have a business which is going fully asset light, which clearly requires a much linear structure to operate. So we were kind of a very difficult phase because as all the other scale ups in that moment, of course, you are trying to go to profitability. So you have to understand where to make efficiencies and where to make cost cutting. But for us, it was cost cutting and a profitability plan embedded with a pivot that started already 2 years before, luckily, changing the whole kind of organization and operations of the company. That was a strategic transition process that took us almost 2 years, started at the early 2023, ended last year when we finally closed kind of the balance sheet in a pretty successful way, I would say, considering the market environment. We reinvested the proceeds in growing the asset-light business, and today the business is fully asset-light, getting to cash flow break-even in a few months. And so today we see the results of that, and we are happy about it. But those were 18 months where we had to take tough decisions, make difficult calls in the interest of the company, essentially.
Yes, and you had to act very, very quickly, I imagine. And you also raised a huge round lately that I think helped you to shift away from the it's an instant buyer model. How did you, like, tell me the real story behind this pivot? How hard was for you, or what was the hardest part internally regarding the structure or of the company, the organization of the company, or the message to your external investor that you had to pass in order to justify the switch of the business model?
Yeah, I would say in one way it was something that we were already preparing. So it was not something okay that there was an external event, in this case, dramatic change in the interest rate environment, and we had to invent something from one day to another. That would have been much tougher. When we started the business, we started with this asset intensive model, not because we wanted to be a real estate fund or whatever, because we simply thought that it was the boldest and smartest way to attract supply sellers with a very distinctive value proposition on the market. But the whole idea was to start by providing liquidity with our own balance sheet. And then over time, the thesis was we would be able to aggregate enough supply and on the back of that, enough demand from home buyers that we don't need anymore to put our balance sheet at risk. So that was a process that started already before, actually after COVID, early 2021. The proposition was so disruptive that we had thousands of home sellers which were going on Casavo.com, and they were asking us to make a cash offer for their home. And the problem we had was that we were not able to serve as many customers as possible. And
Wow.
that those that got the cash offer and we ultimately buy the home were extremely happy about the service. But those that we couldn't serve were quite unhappy about our service. And we were already at the peak of, I think we reached the peak of buying 30 million euro per month of homes, which is a lot.
Wow.
And so there were two choices there. Either we were going up to billions in terms of balance sheet exposure to serve as many customers as possible, or we expand our service with what we call the asset light marketplace. So technically doing brokerage of the transaction. So telling theoretical, the valuation online is between 300 and 330K. We can buy today at 290, say, or we can help you find the perfect buyer for your home. And potentially we are going to realize between 300 and 330K. I'm throwing numbers. So that's when it started. So when the interest rate environment changed, because of course we knew that interest rate could change, and at some point there could have been a certain degree of volatility, we were kind of already a bit prepared. And we couldn't anticipate that was happening so fast in that specific moment and so abruptly,
Yes.
but we
Yeah.
had that in mind. And
Yes.
so we were lucky that when that happened, already 50% of the business was acquired, not with our balance sheet essentially, but as a brokerage platform, a little effect. And so that was one piece that kind of gave me relief in taking that decision, because it was already part of kind of the route to our long-term vision. The second part, the difficult part there, I think, was kind of losing a bit your DNA, no? Because we were kind of exceptionally good in selling and buying homes extremely fast to the balance sheet and managing kind of granular residential portfolios that nobody did that, especially in the Italian market. So that was kind of a pity to say, okay, yes, we're going to have a business which is pretty cash, is growing nicely, but is not as disruptive and is not leveraging that kind of know-how patent which we have built over time. I think that was the tough kind of call, but that was a necessary call in the very short term to kind of navigate a very difficult macro environment in that specific moment. So I think that was a bit the most difficult part, no? Because of course the vision stayed the same, but the way to get there in the business model had changed. And so for the team to understand that, to reskill the team, you need different kind of capabilities, and also to position yourself in the market is not that easy, because we had a pretty strong consumer brand when we had to take those decisions.
Yeah. And if I'm not wrong, you fully transitioned to Casavo, fully transitioned to a marketplace model right now, because
Yes.
I read that in 2024, Casavo completed the sales of the remaining real estate inventory, successfully sold at 36 million. So congrats. And my next question for you will be, you run this business in 4 different countries. So how did you manage to do that? How are you managing to do that? What's the hardest part? Because the real estate business is extremely localized, let's say. So you have to be present. You have to be on top of the game of each business. How do you handle that?
Yeah, I would say First thing is we started from Spain at the end of 2019. It was not a great time because we entered and then COVID came in. So I think the first important piece was having the right culture. So because when you go from being a kind of a national play to a multi-country play, it changes a lot. It changes the dynamics within your company. You need to make sure that every doc is done in English, that you're speaking English during meetings. That's basic example. But also it changes the approach, no? Because you have to look at things and problems that you solve, for example, on the product side, not just for Italy, but for Italy and Spain together, etc., etc. So what we tried to do was like building kind of a common infrastructure or baseline of culture, values, basic processes, headquarter operations, and product as well. We tried always to have a to develop things, not to have a product in for Italy, a product in for Spain, a product in for France, for example, but to do everything by design always that could be flexible enough, especially when we look at the workflow transactional software behind of how we operate. That was another important piece. And then being respectful of the fact that, as you said correctly, real estate is a very local business. So of course the socio-economic dynamics of sale, a residential sale in Italy, Spain, and France extremely similar, but there are local nuances. So you have to understand how to adapt your local business strategy, your messaging, and the processes, especially, and the commercial operations as a whole, that specific market, so that you can win locally as well. And I think that was a bit our kind of recipe, which is very different if you are, I don't know, running a very horizontal software that you can sell independently in any country. Then we tried both ways of expanding internationally, both greenfield, what we did in Spain, and brownfield as well, meaning that in France, for
M&A.
example, is a very important business for us. And nowadays, we bought a company.
Proprio? Is it the
Yeah,
right pronunciation?
in 2022.
Yes.
Uh, uh, and that was our way to enter a very strategic market because France is the largest residential market out of the European Union. It's roughly twice the size of the Italian market. And so
How
that
was
was
that experience? How was integrating another company within Casavo?
very difficult as well. We had done a smaller M&A in 2020, but there was a product kind of acquisition in Italy with the leading virtual tour solution for brokers and real estate in the residential segment here in Italy. But that was very different. Here we're talking about entering into a new market, buying a French company with a different culture, different founders, etc. So, I mean, we were prepared a bit because we had done that product integration before. So you have your own integration plan, you follow the stream, you have kind of someone that is fully
A
dedicated,
structure.
let's say, for 6 to 12 months to that kind of specific project. I would say that the basics when it comes, I don't know, to processes or cost consolidation, those was quite, it's an execution problem, but easy to solve, so to say, when you have clear ideas of what you want to do with that asset. The most difficult part was definitely the culture, changing a brand in a consumer space. And so, same logic as before. You have to be respectful of what has been built in that over the years in that company. You have to understand what you can offer to that company and what you can learn on the other side to change. We changed a lot of things we were doing in Italy on the back of learning what they were doing in France.
Oh,
And so
that's
you have
interesting.
both a component of different national culture, which is different, and a different company culture as well. So that comes with a lot of rotation in the team as well. So you have to understand who is really into embracing completely new mission, vision, etc., and a new kind of path, and who is simply willing, not willing to do it and forward. So the culture and the people stuff part was very difficult. Then you have other founders, companies always a byproduct of the founding team that stayed with us and supported us during the integration phase, but had a plan to move on essentially. So that was another important thing that we learned essentially on the ground. And yeah, definitely changing a brand in the consumer space takes quite some time. And you have to be very careful about how to do it, when to do it, why you're doing it, and all of that.
Yes. Thank you for sharing. And Giorgio, now you are in the build for profitability phase, let's say. So how different is your mindset today compared to the Series A, Series B stage? What's changed in how you lead, prioritize, make decision, and so on?
So I would say, first of all, I hope I'm a bit wise because I have lived different market cycles and I've seen different things. And so you read things and you take decision definitely with a different lens. So that helps a lot. I would say that when you are in that phase, when you have to be to reach a profitability point, my trick and what I had to do was to shift a lot the focus from kind of the long-term strategy and the vision to the very, very short term, which is a bit more unsexy, but is what the team needs to know to be guided in that phase. And this is especially true when you get very closer. Now it's a matter of months for us. So you really are focused and you communicate around the specific KPIs that you have to reach in 3 months, in 6 months, in 2 months, this month, etc. And you are very focused on that regard. So I would say the second thing that has changed is that you spend your share of voice is more around the short term versus the long term, which is always there, but simply you spend less time on it, and it's more on the short term. Third, uh, it's about taking decision and be very, very grounded on the fundamentals of a business. What's your P&L? Where are you acting on this cost line, on this top line lever, etc. And so it's more around taking incremental decisions rather than structural decisions. Of course, you take structural decisions, but you can afford kind of way less strategic projects and distractions. So what I do is kind of try to align the company and the whole management team on an execution framework of what we have to do over 12 months, what's the roadmap, and then prioritize maximum 3 things on the strategic, well, from a strategic project standpoint that we want to focus on. Because you don't have much time, you need to be very, very much looking and focus on the core other things. So that's a bit it. It's clearly an inflection point because it opens up then a new complete phase. When you start to be in a profitable growth kind of scenario, then you are going to grow, yes, but you have to understand, okay, you have a different kind of decision-making framework to your resource allocation and what you want to push as a driver and what not. You look at raising capital in a different way because you might want to raise capital even if you're profitable, but you are not in a position of need. It's more around the optionality. And so the first kind of reflection is not, okay, what's my cash runway, and so when do I need
Who do I want to bring on? Probably even more.
And most importantly, why would I raise capital? Is there an accretive project compared to the cost of capital or raising or having more dilution? And secondly is, what would I do with that money? If you raise money just for the money to sit in the bank, unless you do it because you have a partner that you like too much and you want to bring that investment firm on board, it doesn't make much sense. It's dilution for the cost of dilution, and the cash would sit in the bank account. So it's more around thinking around the use of proceeds. Are we ready to accelerate growth on this specific item? If we want to invest more here, is it the right time? Should we wait a bit or not? And so that's, a new phase for me and for the company as well. So we'll probably need to spend a bit of time end of this year to redesign a bit the strategic priorities which we have, but we'll have to review them in light of where we stand at the end of this year for the coming, let's say, 36 months.
And while navigating this new phase, now you are leading this amazing, successfully scale up, right? And how do you feel right now? Do you feel more like a CEO, or you still have this spirit of the 24 years old founders that created the Casavo at the beginning?
I very much enjoy that kind of building part. And even nowadays, maybe it's wrong, but I really like to get operational into things. So I try to pick up a few things where I really go into the details of things, where I try to speak with customers, see the market dynamic, and so to take the right decisions and not being detached, but actually being as involved as possible. And so I love it, whether it's about creating the incremental value of what we are doing already well, or rethinking things that are not going that well, or catching opportunities that we might see in terms of market or something that we could do pretty well based on the competitive advantage and position we have built in certain specific areas.
Yes, no, that's a great answer. Giorgio, we are getting to the end of our episode, and the last question that we always ask is what gives you momentum on your daily basis, on your work? What is it that motivates you?
I get really galvanized when I build something, especially from scratch. Could be new things, can be a different service or a different ones of what we offer already today. It gets traction, it creates an impact. And when I say that all the points align, that I create value for my customers, which are sellers and buyers, when I create that, and that creates value on the back of that of brokers that work with us and partner with us, create value for our company in terms of generating more revenue or more EBITDA, and as a consequence, creating more value for the stakeholders as well. So I really galvanized about building new things that I see create ecosystem value for our customers, for our partners, for us as a company, and our financially, and on the back of that for our stakeholders as a whole.
You do have a founder soul inside. I wish you all the best for the profitability phase of 2025 for Casavo. Giorgio, thank you so much because it's been an incredible interview. I really enjoy it, and I know that our audience will as well. So I hope to stay in touch and to hear all about the success that Casavo will achieve.
Thanks a lot. It's been a pleasure. Thanks again.